And lastly, we've got our lovely Kath Parrington, who's going to talk to us today. That's her links here. If you want to link with Kath, take a screenshot or a photo of that just now. I think Kath might have linked her LinkedIn. She might be able to connect with her directly on here. So I'm not going to say any more. I'm going to let Kath do her thing. So let me stop my sharing. And then slideshow, and then we will bring Kath up as a speaker. I need my alphabet. I can't do my alphabet too. There we go.
And we're there.
Hey!
Technology works. I'm delighted.
Fantastic. So I'll leave you to, you can take, I don't know, I can never remember if you guys can see me on screen as well as Kath or not. If you want, you can just put Kath as a full screen and get her on there and take my ugly mug off that.
Fantastic. Thank you, Fiona, and thank you for the opportunity of letting me come along. The reason why I'm along here today is really, it kind of came out of me networking. I started coming out networking, and the thing about networking is you've got to tell people what you do. And I started trying to describe what I did, and I'd end up getting tied up over, I'm a property manager, I've got a property portfolio, do buy to let, but I don't just do that, I do other stuff as well. And in the end, I kind of came out and said, look, I'm an investor. It's as simple as that. What I do is quite broad, but I'm an investor. And then I found out that actually there's not many people go out networking and admit they're an investor. It's not like there's a club that we can join. We don't go to have drinks like a tennis club or anything like that. You know, there isn't a society of investors. So I don't know whether I'm a normal investor. I can't tell you what normal is. I just know that I'm an investor. And I found as I was talking to business owners that actually it was quite interesting for them to talk to an investor. And I think there's lots of reasons at the moment why it's particularly important. Anyone running a business knows that the biggest barrier to the business, the biggest problem with the business quite often is cash flow. I think anyone will admit that if you've got no cash, you've got no business. And most people plan for cash flow issues and they start with the right intentions, but stuff happens. I mean, blimmin' out, look at COVID. How many of us had a COVID plan? Anyone? You know, please feel free to share it if you did, because I don't think any of us had the crystal ball. So COVID's kind of brought this into focus, but it was always there. Cash flow is always going to be one of the biggest challenges for a business. And there's always routes you can go to for cash flow. So what I wanted to do was just kind of talk about some of the standard options and then talk a bit about private investors, because that tends to be the last place that people would think about to go, when actually sometimes it's the first place you should go. And I just wanted to try and help people understand where the opportunities might be. There's lots of reasons why people don't get involved with private investors, and I wanted to dispel some of the myths as well. So that's really what this session's about, no more complicated than that. I'll give a disclaimer right out front. I do not give advice. I'm not here to give advice. I'm not a professional. So I'm not a mortgage broker. I'm not a financial advisor. I'm not qualified in this. The only thing that qualifies me to be an investor is the fact that I've actually planned for the long term and I've managed to accumulate some money, which I choose to invest in other things now. So that qualifies me, but like I said, there's no other qualifications. So I don't want anyone to think that I'm advising them. There's a good set of professionals out there. You've got accountants, you've got solicitors, you've got brokers, you've got banks. Whatever you choose to do to fund your business, do your due diligence and speak to the experts. But I just wanted to get people to think that perhaps there might be an alternative route when you think the route isn't there. Is everyone okay with that? We're good?
Yeah, I think that's great. And can I just ask if anyone has any questions? Well, Kath's doing her presentation. There's a Q&A button. So when you go into the chat, go to the Q&A, leave some questions there for Kath and she can answer them at the end. That would be fantastic. Thank you.
That would be great. I'll confess I'm not very good with Remo. I do more on Zoom, so I'm kind of still getting to grips with how the chat works on Remo and that. So I'm relying on Fiona to keep me right. I don't mind being interrupted with questions. You might need to interrupt me anyway because I can talk. You give me enough space, I'll just carry on talking. So we'll try and keep this tight. So first of all, the places where people normally go for funding. The obvious ones, most people think about going for a loan to the bank. The banks are there to provide funding. You also get brokers out there, brokers who are quite often property skewed, but some brokers are there specifically to provide lending and funding for businesses. You can get grants. You know, there are people that will help you get a grant to start your business, to run your business, to do a specific thing with your business. You know, the things like research and development has grants associated with it. Startups have grants. The circumstances where grants are available, but they aren't available to everyone. Crowdfunding's become quite big over the last few years as well. So it's not just the banks anymore. It's not just the brokers. You know, you can go onto a web page and just ask people to provide you money. I love Brewdog. Brewdog are a fantastic example of crowdfunding because basically people pay to have shares in Brewdog, and really all they get in return is beer. They don't even get a dividend, you just get beer. But actually it works, and they've got a real cult following. So it shows there's different ways of funding your business. And then most recently, the government's kind of got involved in funding as well. So if anyone hasn't applied for the bounce back loans, or if they're eligible for civils, have a look at that, because it's the cheapest lending you're potentially ever going to get. So, you know, certainly worth exploring. Those are routes that wouldn't have been available to people 6 months ago because we hadn't anticipated. But they're all there for good reasons, and they're there for the right circumstances. There are times when those routes don't work. I know particularly around startup can be really, really daunting for a small business. Sometimes actually the amount of money that you're looking for doesn't really fit anyone's category. You know, sometimes, quite often, to start a business, you maybe only need £100. You maybe only need £1,000. But if you haven't got that money needs to come from somewhere. Now, there's not many people who go to the bank for £100 to start a business. But that doesn't mean that you shouldn't think about funding your business by using someone else's money. There's good reasons to do that. Some circumstances is definitely the right call. The other thing that people do use private investors for is particularly limited companies. I don't know how aware you are, it depends how experienced you are, but basically, as soon as you become a limited company, your financial history becomes a matter of public record. Your accounts are out there. If the bank's got a mortgage over your property, that's listed. So there are some industries where actually, as soon as you take borrowing from traditional routes, it can tip off your competitors that you're up to something. So sometimes people go to private finance for that. There's lots of reasons why you might go to private finance, but not many people do. And for that, I blame Dragon's Den, I'll be honest. I think they make private investors look like this big mythical thing, when actually we're generally not. So most people see Dragon's Den, and what do you see? Typically, people are asking for £50,000, £100,000, sometimes more. And they're looking to, in return, they generally have to give away about 50% of the business, which then means you need to write shares. It gets complicated. And you might not actually want to give up your business. And it really does create this big myth and this big complicated model. Now, I've invested in businesses. I've invested £1,000 in a business. That was it. And in return, I got a little bit more back. It doesn't have to be any more complicated than that. But Dragon's Den makes it look scary, when actually it doesn't have to be. So, I found out it helps if you understand a little bit about how an investor thinks, because that can generally give you the confidence to ask, you know, you might think, why on earth would an investor invest in me? Why on earth would an investor invest in anything that's risky as a business? So I thought what I'd do is just explain how I've got to where I am and kind of how my brain works, because that might help you have the confidence to try and find the investors in your network next time you're looking for funding. So a little bit about me. I did the good corporate citizen thing. I left school, I went to university, and I spent 25 years working for a bank. That taught me a lot about how not to run a business, to be fair. But it taught me a lot about the details of what's useful to run a business. And during that time, I got involved in businesses as well. But going way, way back, I developed a mindset right from childhood. So one of my earliest memories is playing Monopoly. Monopoly is a fabulous game if you want to get into business. It's a fabulous game if you want to learn how to manage money. Back in the days when I started playing Monopoly, you didn't even have a free parking thing. Do you remember the free parking thing? People started dumping all the fines in free parking. If you landed on free parking, it was a lottery win. You know, it kind of kept the game going. But you know what? It undermined some of the lessons of Monopoly. Biggest lessons of Monopoly for me were actually you didn't really want to invest in the expensive properties because you paid a lot of money and you didn't get that much more in rent. Where the money was in Monopoly was the oranges, the pinks, the greens. They were the ones where actually you put a reasonable amount in and you got a really good return on your money. You got those, and actually you're more likely to win than the people like Park Lane and Mayfair. So Monopoly, yeah, start playing Monopoly. If you haven't played it for years, give it a go. It's great fun. But that was kind of my kind of starting point in business. But then I went through a few things which shaped my experience. So I was brought up in Scunthorpe, that was a steel town. So in 1979, there was a steel strike, and my dad was not working for the best part of a year. After that, then half the town became unemployed because they shut one of the steelworks down. So he was the main breadwinner at the time. So from the age of 10, I earned my own way because money wasn't easy. And that gave me this real need for security. Money's always been an important thing for me, but it's been an important thing to know that I've got that I'm looked after, that I'm not going to be vulnerable, that we might not find ourselves out on the street. And because of that, I developed a savings habit. And before I realised it, I developed an investing habit without even realising that I'd done that. So for me, what I've always done is kind of lock money away in the long term. So for me, money isn't real. I've got to have a safety net that's cash. But after that, then I put my money in things that I can't see. I can't get that money back easily. Because if I can get that money back easily, I might spend it. I don't want to spend it. I want to put it in things that can grow. So I've always had that mindset that money's not just about its ability to buy things, but it's about ability to work for me, to grow for me, to provide me with security for the future. And that security became more and more important. But then you start looking at, well, what is money? Ultimately, what is money? Money is something that allows you to buy things. So it's only worth what it will allow you to buy. And that gives you the problem with cash. So cash is a problem. It's a problem to anyone who's kind of got it. And I know that sounds really kind of glib and cynical, particularly if you're struggling for every penny. But the reality is that cash is not a good investment, not if you're planning for the long term. And there's a reason for that. I feel like I should be asking questions, and the problem is I can't see the chat box, so we'll just go with me on this. So basically, anyone who looks at the economy, you'll be aware that the base rate through COVID is the lowest it's ever been, which is great if you want to borrow money, because the base rate is only 0.1%. So you can borrow money really, really cheaply at the moment. If you have money, it's a problem, because actually you get virtually nothing holding that money in a bank. And what makes it worse is that inflation runs at 3 to 4%. So inflation is basically the thing that dictates how much your money's worth, what your money can buy. So what happens is if the price of the goods that you want to buy is increasing at 3 to 4%, but the money you're earning in the bank is only increasing at 0.1%, for example, you're actually losing 3.9% every single day that money's in the bank. And it gets worse. Has anyone thought about the implications of negative interest rates? It's gone to, there's a couple of places in Europe now where they have negative interest rates. And that's a really interesting proposition for people who have cash in the bank. Because if you think about it, a negative interest rate probably means that if I want to store my money in the bank, I'm going to have to start paying the bank for that privilege. So not only does it not grow, and it doesn't grow at the rate that inflation grows, but actually it's going to cost me money to store it. It already happened with the oil industry. The oil wholesalers, the producers, were actually paying the oil wholesalers to take it off their hands, because the producers are used to just shoving oil down the pipeline. And there's enough demand that you make money on it. And then we stopped driving because of lockdown. So no one was buying petrol. And there was nowhere to store the oil. So the wholesalers charged the producers a premium. Suddenly the oil producers were having to pay money to the wholesalers instead of the other way around. And the banking industry is about to do that if we're going to negative interest rates. So I'd be interested, when we get a chance to chat at the end, I'd be interested if anyone's kind of thought that through, if they've got those kind of observations. It's good to find out what people feel about money.
Yeah, I've got a few questions here, but you can leave it to the end if you want.
Lovely. Okay. So that then comes down to making your money work harder, because if cash ain't going to work for you, what will? And that's where an investor comes in. because an investor is looking for money to actually work for them. There's lots of things that I would say. First thing is, be absolutely clear, there's no such thing as a free lunch. If an investment scheme looks too good to be true, it invariably is. There's no easy money. Even the lottery is not easy money. At the end of the day, most people who win the lottery and then lose the money straight away because they weren't ready for the money, they didn't think about the money was working for them. And to be honest, wait and hope is not a strategy. It's not going to get you through business. What gets you through business and what helps you grow the money and make money work for you is you. It's the skills within you. So there are ways in which you can invest money for long-term growth. I've done very well out of property. I got involved in property through buying my own home. But once I'd realised how good a vehicle that was, then I started buying additional properties as well and getting the rental income from it. So I've invested in property. But I've also invested in equities as well. Now, equities are basically stocks and shares. There's different ways of looking at stocks and shares investments. I like to hand my money on to an expert. I will not get involved in buying shares myself. I don't do day trading. That's the risky end of stocks and shares investments. But actually, if you can lock your money away for the long term, stocks and shares are one of the most reliable ways of earning money. And it's one of the ways that a lot of billionaires use. But they hand it on to experts. Now, that kind of risky stuff, the day trading stuff, to me is almost like gambling. To be fair, I do know a couple of people who have made a living out of betting on horses. Now that for me is probably no different to day trading in stocks and shares, because just like stocks and shares, what you can do is you can look at the company, you can understand the history, you can understand what their potential is, you can have a look at their track record, and you can try and predict the future. You do the same with horses. You can look at the breeding lines, you can look at the tracks that they're good at, you can look how they perform and what their motivations are. But ultimately, there's always a risk of a roadblock. A horse will fall over. COVID will hit a business that wasn't planned for it to hit. So, for me, horse racing, day trading, stocks and shares, they're actually a pretty similar proposition. They are risks, but you can make money out of it. And any investor ultimately will work out the risk that suits them. So, for me, investing in the business is really no riskier than investing in the stock market or investing in the property. It's just a question of doing my due diligence and looking at what return potential I'm going to get, and also the benefit of investing in that business and what they're going to get, because the stronger the business case, the more likely it is I'm going to get my money back. So how do you ask an investor for money? How do you go about it? I'll be honest, I keep it really, really simple. I probably keep it too simple, but it suits me. So I don't get involved in compound interest. I don't know if you understand compound interest. That's basically where you say a penny earns another penny a day. You then add that on and do the interest over and over and over again. So it gets messy. So 1% interest suddenly becomes several million % interest because it compounds on itself. Way too complicated for me. I'm not interested in that. I try and keep it simple. So the simplest example of an investment that I would do in a business is, for example, I might choose to invest £10,000 in a business. And the business and I agree that that investment goes over 6 months. So what we'd probably agree is that over that period of 6 months, at the start, I give them £10,000. Over the next 6 months, they give me £2,000 a month. So at the end of the 6 months, I've got £12,000 back in return for my £10,000. I couldn't tell you what the APR is on that. I don't care. It's simple. That suits me. And that's the kind of arrangement that I would do. Now, it might be that a business is a little bit concerned about their ability to pay it back in the first 3 months. So what we might do is we might agree that actually there's no repayments for the first 3 months, and then we stagger and gradually increase the repayments over a period of time. It's up to me in the business. This isn't really lending. It's not as complicated as that. I'm merely investing in the business for a fixed return. No more complicated than that. And you can draw it up under a very simple partnership agreement. It doesn't have to be difficult. Loan agreement's difficult. Banks make it complicated. I try and keep it simple. So really what it comes down to then is, what's the best way of getting an investor to invest in you? And the thing that I've found is be very specific. Be specific about exactly how much you want. Be realistic as well. If you want £1,000, ask for £1,000. If you can go to an investor and say, look, I'm a startup business, I just need £1,000 because that will allow me to develop my website and create these marketing funnels. That will allow me to sell this service, and I'll sell this service at this rate. And at the end of 6 months, I'll have sold this many of that service with this profit, which means that I can afford to pay you back at this rate. You're not talking complicated spreadsheets. You're not even talking actually being able to prove that, providing that there's a degree of due diligence and that you've got evidence that you understand your market, you understand your people, you understand your customers, and so on. Be really clear. The more specific it is, the more likely that an investor will invest in you. If you say, I'm looking for £10,000 because it's going to make you £1 million, but you can't explain how, an investor's probably going to run a mile. If you can explain that you can invest it in this technology, which will uplift your business and give you this return, they're more likely to say yes. But the most important thing is your investor needs to know you and your investor needs to trust you. Someone wants me to sit down and have a coffee and present a business case and ask me to invest, and I don't know them, I'm going to say no. Well, the businesses that I invest in because I know the people, I know their track record, I know what they've done in the past, and I have invested in startup businesses and I've invested in existing businesses. But it's all about the person, knowing the person, the relationship they've built with me. Ultimately, it's about trust. And those investors are out there as well. I'm one of the few people who go out on a business network basis and say, hey, I'm an investor. Only because I don't know how the hell else to describe myself. I don't know what else I would say. But you'll find that there's people who have businesses, have been successful, and what they want to do is they want to share that. They want to see businesses grow. I'm passionate about getting people into business. I'm passionate about how businesses will help grow the economy. I think that the economic recovery is dependent on small and medium-sized businesses. I've seen it work in Germany. I've seen it work in the US. I've seen it work well in the UK when we're not in a recession. I don't think we invest enough in that, but hey, that's my personal opinion. But yeah, I think it's small businesses. I'm passionate about getting businesses off the ground. And what you'll find is you'll have a network of people around you. And particularly if you're not looking for a lot of money, you'll find that the people are out there and they're dying for you to ask. I call it the equivalent of the business bank of mum and dad. You know how people these days go to the mum and dad and say, I need help with my mortgage. You know, I need my deposit. And because your mum and dad know you, they trust you, they'll put the £10,000 down and let you get a mortgage. Guess what? The same kind of people would probably give you £1,000 to start a business. It might not be your mum and dad, it might be someone else who's in business, who you've taken an interest in, who they maybe want to mentor you, want to support you. They're out there in your network. And if you're really not sure how to ask, the safest way to ask is ask someone and basically say, look, who do you know? I want to start a business. Who do you know who might be interested in investing £1,000 in me to start my business over a period of 9 months if I could pay them back £1,200 at the end of that period? And the person you're speaking to might well be saying, I was just waiting for you to ask. If not, they might say, well, I know someone who's got an angel investment fund. And by the way, there's a few people out there like that as well. But unless you ask, you're never going to know. Does all that make sense? Let's see. Have we got questions?
Yeah, I've got a few questions here, Kath. So Jimmy says, hello, Kath. What type of investor are you? Are you an equity investor or an R&D investor or a startup investor?
So I am an investor. I try not to define it. I definitely invest in property. I've been very successful in investing in property. I invest in equities through managed funds. So that's bigger investors, you know, so big properties, but they're big companies. But at the end of the day, I think anyone who wants to invest in a business in return for equity in that business, there's absolutely a market for that. And, you know, there's people like to do that. For me, that feels like it's almost making it too complicated and it's adding an additional risk to the business. So I would prefer to invest in a small business for a fixed rate of return. That's my preference. I just feel it's safer for the business and it gives me certainty. That's my preference. But then again, I don't invest £100,000 in the business, for example. I've got my limits. I know what I'm safe and comfortable doing. You know, the most I've invested is 30,000. The least I've invested is 1,000. I'm comfortable in the kind of 1,000 to 10,000. Above that, I'm starting to feel a little bit more scared. But hey, I still work out what the risk and return is, and that's my choice. But I'll still do that on a fixed return basis rather than an equity return basis. That is my preference. I like to keep it simple.
Okay. Angela says, can you play Zoom on Monopoly? Can you play Monopoly on Zoom, should I say?
Do you know what? I've never tried, but I think we should give it a go, shouldn't we? I love Monopoly. Do you know what?
I was never allowed to play Monopoly as a kid because my mum banned it, but she says it caused too many arguments. She had it banned as a kid, so she banned it from us, so we never got to play.
I love it. Still love playing Monopoly.
Okay, Michael asks, what do you think of online property investment companies like Property Partner or crowdfunding property sites?
Do you know what? It really does depend. It comes down to your due diligence. What I find is you need to do your research. There are companies that are out there that are giving you an opportunity to put a small investment in and take a share of a property in return. My biggest concern with all of that is that actually you start diluting it too far and really no one wins because it gets too complicated to administer. But there are people who are successfully doing it, and if it gives you a toe into the property ladder, then it's one way of doing it. My preference is actually to encourage people who don't have big sums to start investing in property to start perhaps trying to get to know property investors and seeing if there's ways that they can actually earn money from that property investor. So, for example, deal sourcers, people who will manage buy-to-lets, people who manage serviced accommodation, rent-to-rent serviced accommodation. Those are all strategies to get into property without actually owning the property and learn about the property, build your deposit, and then start buying your properties. That's a preferable strategy to me to those online platforms, because I just get concerned that as soon as you've got too many investors in a pot and someone administering it, by the time they've taken their cut, the investors actually get a low level of return. And it also, I have concerns that ultimately, if you've got 50 investors in a property, they're not all named on the title, and ultimately your security in the property is your name on the title. But that's just my personal opinion. It doesn't mean I'm right.
I've got an anonymous one here. How do you decide how much you want to invest in a particular company? What kind of research do you do in advance?
So, like I say, I only invest in businesses where I know the person running the business. Because what I do, I don't actually invest in the business, I invest in the person. That's my preference. So I invest in that person, they then introduce the funds, if it's a limited company, into the limited company. And I'm very clear on that, because what I find is that ultimately I want that person to pay me back. I don't want to invest into someone where it's going to push them too far and it's going to stretch them too far. So again, I need to know the person. So the due diligence for me is getting to know the person over a period of time, understand what their track record is. So for example, it might be someone that I know that has worked in corporate for 20 years and is starting their own business. And because I know their track record, how they think, their ability to deliver against the corporate plan, for example, that will give me a degree of confidence that they understand how to manage the process, manage the finances, and get the money back to me. If it's a person I know and I've seen their business grow, usually I'll be talking to them and they've got a specific strategy in mind. So, for example, I did invest in a business where they were wanting to bring on their first employee. Their employee was going to cost them £24,000 in the year, so they wanted to borrow 12 for the first 6 months, because they got a plan which said that based on their track record and their experience of doing the job themselves, they thought that that employee would be earning a level where they could actually have paid for that £12,000 back in the first 6 months. So we did a staged repayment based on that employee's trajectory of learning how to do the job and then start delivering the payback. It was a very specific business case. And it's that kind of due diligence that I do. I certainly don't sit down with someone that I don't know and look at their books and say, yes, I'm going to put £20,000 into your business. That's not how I operate. But that doesn't mean someone else won't. Like I say, there isn't really a handbook for this. I don't belong to an association. I can only share my experience.
Okay. Now, Paul asks, what kind of return would you typically seek?
So, like I say, I don't really deal in APRs, but if I was going to lend you £10,000, I'd be looking for about £12,000 in return over a 6 to 9 month period. A smaller amount, it might be a lower amount that I look for back, because there's got to be risk versus return, you know. So if I lent you £1,000 back, £1,000, I might only want £1,100 back as opposed to the £1,200. It's not directly scalable. Ultimately, I'll make an agreement with the person. So on a simple calculation, £2,000 on £10,000 is a 20% return. But it's not in terms of APR or AER or anything like that. It simply is. I get a £2,000 return on the £10,000 that I invested, and I keep it as simple as that.
Okay. I'm the same, 1,000 to 10,000 max. Michael asked, do you want invest and step back? If not, how much do you get involved to protect the investment?
So I try really hard not to interfere, because there's nothing worse than having your investor breathing over your shoulder. That's what I mean about it being important that you have a relationship. I would not invest in someone if I didn't have the confidence that they could deliver that money back to me without me. I'm not interested in managing someone's business. That said, I've always said to the people that I invest in, look, the unforeseen can happen. And when COVID hit, I sat down with both the businesses that I was invested in at that time and said, look, how are you doing? How are you going to cope? Do we need to suspend the payments for a couple of months just to see you through that period? Because the last thing I want to do is see a business go under because of something unexpected. But like I say, I am as confident in the investments in my business as I am in, for example, investing in property or investing with experts in the stock market. I've made some mistakes, don't get me wrong. One thing I'll never do is invest in friends, because I had a friend who let me down badly. Yeah. She still owes me about 15 grand, and that was after I'd repossessed a car. So, yeah.
Yeah, she'll come after you. You don't pay, don't worry. Okay, so that's just about wrapping up. Jimmy says he'll negotiate anything between 4 and 20%. Interesting, Jimmy, because I didn't know you did investment, so that's a good learning point from us at this point as well.
I tell you, they're out there. You just don't know. I'm the only one who actually admits it.
Keep it to themselves. That's fantastic, Kath. Thank you very much. Really appreciate it. Oh, somebody's got one more sneaked in here. My mind went blank and I can't remember the correct term, but what is your thoughts for a more hands-on investment as the investor has the contacts and skills?
Nothing wrong with that if that's the arrangement that you want, because do you know what I am passionate about is mentoring, so I love business coaches. I think business coaches are amazing people. I've tried it doesn't really suit me, but for those people who like to coach, do you know what, it's a fabulous relationship to have. And if that's what you're both looking for, then great, that kind of investor can add value. My preference is not to do that, because I actually like to have my time free to do other things. So I like to have the confidence of the person I'm investing in the first place. But nothing wrong with that relationship. And do you know what? I've seen it work really, really well.
That's fantastic. Thanks very much, Kath. So catch up with Kath. She's going to be around for a bit. And if you've got any more questions, you can give her one to want to have a little chat about when we do the networking side. And I'll see if this works. It didn't work last time. I'll take you off, Kath, and I'm just going to do a quick introduction to our members before we get on with our speed networking. So we'll try this. Oh, so we'll talk to you soon, Kath. Bye.